In terms of how we see the budget, basically the budget is part of a process. And there was some, over the last 12 months, we actually think that politically what's happened is that the Treasurer is all about trying to essentially give a surplus. It's very much geared to the international capital markets, and it's also geared political. There has been some accounting tricks, if I can put it that way, in the sense of moving money between one year and another. Roughly, they moved about $4 billion out of expenditure that's going to occur, or would normally have occurred next year, into this year, which is making it this year's deficit a hell of a lot larger than everyone thought, and it gives you an ability to essentially get a surplus on the other side. We actually have slightly weaker growth forecasts than the government, something like about 2.8, 2.9, and the government's got 3.25. I actually think if I had to sort of summarise one big picture item about this, this is a fiscal policy that's really quite tight and is geared to get the RBA to cut rates more. In terms of where are you in a structural sense, so forget about what the total budget is. Where is it when you just think about what it's doing in terms of an ongoing structure sense? So it's what the budget is actually doing, that we're just about almost back to a structural neutral position. And that's a pretty big achievement. This is a graph that basically tries to give you some sort of feel. So it's the government's actual outlays. And the blue line is what they said their outlays would be last year. And the red line is what they're saying their outlays are now. And what's pretty apparent about that is suddenly you can see there's a lot of spending this year. You have got this big transfer of about $4 billion across financial years. But basically what they've done is they've essentially paid 9 months' worth of the carbon tax household benefits into June. They've basically paid a lot of the coal sector jobs packages, and they've also paid things like the Queensland floods. They've paid a lot this year, they pay nothing next year, and then they get back to normal the year after. In terms of the new measures, tax loss carries forward to small business. So basically, this year, if you're in a small business and you've got a loss of $1 million, you can sort of carry it forward and claim it back. In terms of the costs, not proceeding with a 1% company tax, which saves them $4.8 billion over 4 years. So that's actually quite a lot of money. The reduction in the superannuation concession for high income earners. So the ones that sort of are in there and operating this year, but not sort of counted in the budget because they've already been announced, is essentially the mining tax. And it's about $10 billion over 3 years. And you've got the carbon tax, which they think will basically raise somewhere around about $4 billion next year. A lot of these things here, and particularly on this slide, are quite important. You're talking about $7 billion of additional taxation this year. I think really the more important thing is you've clearly had a very, very large fiscal consolidation. The markets internationally will be impressed by that. And you do need to remember where Australia starts from. If you talk about debt levels in Australia, it's 9%, it's maximum this year. And you sort of compare that to what's happening in various countries around the world. What about rates? In the short term, inflation is not going to be a problem. And so therefore we're expecting another 50 basis points. And if the economy deteriorates even more than we expect, then they could do 75. I don't know the timing, it depends on the data. We're going to be struggling along for a while. Very multi-speed. Budget sort of doesn't address that, but it does help you in relation to what the Reserve Bank is going to do, I think, as they go forward in the next few months.